Hi there, Serial Trader here. Gonna check in with the major US indices and don't want to do too long of a video this week. I just want to expand a little bit on last week since a lot of it is still applicable here despite probing those prior lows yesterday on Friday. Okay, so the S&P 500, SPX here. I think we still can make a case that this is an ABC correction down. Obviously, we're going to have to readjust where our absolute low was to accommodate this new spike low that we had on Friday. Okay, and as far as the wave count goes, I mean, it's debatable. You might, instead of having the 3 and the 4 and all of this being the 5 here, maybe all of this is 3, this is the 4, and that was our 5. And I mean, let's just see how this measures up. Maybe we got something like 5 versus 1 equality. So yeah, okay, so that's pretty close. This proposed revision here gets us pretty close to 5 versus 1 equality, and then obviously wave 3 would be the longest extended wave, which is typical. So just pointing that out. Anyway, back here. I mean, it would have been nice for that low to hold. I mean, every time we come down and make lower lows and don't make any higher highs, it gets harder and harder to think that this is going to have a bullish outcome. But at this point, let's see, how many weeks down in a row are we? 1, 2, 3, 4, 5, 6, 7. Okay, so 7 weeks down in a row in the S&P. I challenge you to go back and find how many instances of that or greater, declines as far as duration are around. There's a pretty slim selection to pick from, and they all usually had a pretty substantial move up afterwards. But if you want to do that homework, you can go ahead. Just bringing it to your attention. Okay, so what I want to do here is go on the weekly chart. So we're still on a closing basis, kind of hovering around the AC equality. Obviously, we've gotten below that a couple times here. We're hovering just below this parallel trend channel, so we definitely want to get back into the parallel trend channel. We don't want to continue trading below this trend channel because that starts to look more menacing, more impulsive to the downside. One thing I'll point out of this proposed wave 3 on the weekly chart, we're now in the 618 retracement zone, in fact, between the 618 and the 65. So we're in the golden zone of a retracement area for this overall wave 3, for this proposed wave 4. So as long as we stay, above that 65, remain within the golden zone, we have the potential of a reversal out of that zone. So just I point that out. Although this is becoming a pretty deep retracement as far as the wave 4 would go. You really don't want to see much more than that. In fact, the next level down here, the 786, that's getting you right into the 4-1 overlap territory. So really, we want to see basically a reversal right away here. Okay, so I pointed all that out. We just had monthly options expiration, so we've certainly seen in the past many instances of a significant pivot, often a low being made on options expiration or even the following Monday. But I think in this case, if it's going to work, it'll have been on yesterday, Friday's option expiration. We spike the lows, clear out all the stops that were right under that low of the previous week. And then we finally get the move up that we've expecting. If that's how it's going to play out, I think that's kind of the prescription for that. Okay. Now what else do I want to go do? Okay, everything last week still basically applies. We still have a bullish divergence. Lower lows in price, higher lows in RSI on the daily for the S&P. Same would go for the 4-hour. We're actually basically oversold right around 30 now on the weekly RSI for the S&P, so I point that out. A little more oversold than last week. Again, 7 weeks down in a row. It's not just going to keep going down every week in a row, even if it's pretty bearish, right? So a relief rally seems at the very minimum very likely here. Okay, what else did I want to point out? Okay. Yeah, that's probably what I want to go through with the RSI there. NASDAQ. So I'll actually point out the NASDAQ. Of course, the NASDAQ still maintaining its bullish divergence in RSI. So higher lows in RSI despite the lower lows in price. NASDAQ also had a nice reversal off the lows on Friday. I'll point out NASDAQ RSI in the weekly now more oversold than it was at the March 2020 COVID low. So even if you're super bearish, how could you possibly think that we're not going to get some sort of reaction rally when we're already more oversold on the weekly time frame, officially now, than we were at the March 2020 low? Okay, so keep that in mind. Also, AC equality on regular scale. I know I was talking about the log scale versus regular scale last week. Well, now we don't have to talk about that. Now just straight up regular scale, we've achieved the A versus C equality on the NASDAQ 100. Again, more oversold the March 2020 low on the RSI weekly. Here's what I want to go through on the daily. So we actually have better looking subdivisions now on the NASDAQ. In fact, I like the subdivisions best here. So if this is a 5-wave move down for C, we got the 1, we got the 2, then I say we got the 1, 2, 3, 4, 5 of the 3, 4, 5. Let me just drag this over. Drop that 1 degree. You see what I'm getting at? And of the 3, we can subdivide the wave 3 itself into a nice 5-wave move. And let's drop that degree down by 1. So we had an extended third wave. We have excellent subdivisions throughout this entire C wave, proposed C wave. So 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5. So hit the AC equality relationship, almost bang on there. We have beautiful completed looking 5-wave decline with a third wave extension. We have bullish divergences on the daily RSI. I'm sure the 4-hour as well. Yep. And we're more oversold in the weekly than we were at the March 2020 low on the NASDAQ 100. And we're still also right around that 50% retracement of the entire move off that COVID low on the NASDAQ 100. So that is what I want to bring to your attention. So again, of course, this can just keep going down, but I think the odds are just ever increasing that it's going to turn up, at least for a larger relief rally, if not something more substantial. That's still my stance. Okay. Yeah, that's basically what I want to go through on this section. I'll do it real quick here. So we had a bullish hammer reversal candlestick on Friday on the S&P. We actually closed slightly higher for the day, despite at one point looking just awful. So that's something. Weekly, anything to remark on the candles there? Not really. Again, down 7 weeks in a row. That is not sustainable. So be looking for a substantial bounce here anytime now. Dow Jones Industrial Average. Same idea. Bullish reversal candlestick on Friday. Closed slightly higher for the day despite being down so much earlier. And again, that was expiration Friday. So again, same as the S&P. Nothing really to remark on this any different. Now, how many weeks in a row is the Dow down? 1, 2, 3, 4, 5, 6, 7. So the Dow is also down 8 weeks in a row, just like the NASDAQ. So even more extended as far as duration as the S&P. Just mentioned that. NASDAQ composite. Bullish hammer reversal candle on Friday. Weekly. I think it's largely the same as the NASDAQ 100. 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks down in a row. Not even so far away from the 200-week moving average on the NASDAQ composite. Although not quite there yet, but doesn't have to get there. Yeah, okay, so that's the NASDAQ composite. Let's go quickly look at the NASDAQ 100. All right, so we've achieved our AC equality on NASDAQ 100. Bullish reversal hammer on Friday. What else? Let's look at the weekly. If there's anything unique about it. Not really. It looks largely the same as the composite. Oversold on the weekly oscillator. Okay, so that's the NASDAQ 100. VIX. VIX continues making lower highs despite the lower lows in the indices, and that is still a bullish divergence as far as SPX is concerned. Okay. Let's look at the VIX VVIX tool. So again, despite coming down again, making lower lows on SPX, making significantly lower highs on VVIX and VIX, both from going back to these measuring points, but also just locally. We also have another shorter term. So here we made a slightly higher high in VIX before we rolled over, but we made a lower low in VVIX before we started rolling over. So that is another more localized, divergence between VIX and VVIX, as well as the actual larger divergence between overall lower highs on VIX and VVIX versus the overall lower lows on SPX. So again, bullish divergence remains intact. Again, our signal produced, so we had a signal back here where we got above the blue moving average on SPX after getting below the red moving average on VVIX. It did produce a bit of a move up, but it was nothing trending or sustainable. We roll over again. So awaiting the next potential signal. So we're just starting to knock on the door of getting below the red moving average on VVIX again after a divergence. And then we need to get back above the blue moving average on SPX, which is currently 39.60 something. So we'll watch for that next week. All right, well, that's all I wanted to go through today. And, if this is going to actually turn up, I think it really has to happen next week, and it's got to be substantial. It's got to be convincing. We can't just keep doing these little bounces and rolling over to new lows. I mean, yes, everything still looks primed, for a reversal, but we actually have to get it. You still have to have that price action take place. Up until that point, we're just anticipating it based on these, things we keep looking at. Anyway, we'll see what happens next week. Serial Trader signing off.